Welcome to this Killik Explains finance video. This week, 5 key questions for budding freelancers. We live in what's called a gig economy. People think, okay, I'd actually like to go it alone, but actually, what are the things you should think about before making what is quite an important decision? Now, the big decision, therefore. Many employees consider a move to self-employment or have it kind of forced on them if they lose their jobs, for example. It's becoming more and more common. The pros and cons do need weighing up carefully if this is something that you are going to decide to do. And here are 5 questions that you should be able to answer, ideally up front. Now, there are more than 5, but here are 5 biggies. First of all, what kind of person are you? That's not meant to be an insult, it's just asking the question, are you more suited, if you've got a choice, to employment or self-employment? Because employment can be annoying, bosses can be annoying and so on, but it does come with a lot of benefits. Security is one, security over income, you know how much you'll earn each month, you can predict what you can spend on holidays and that kind of good stuff, it makes budgeting easier. And holiday and sick pay is covered. You have annual leave and you're paid to do it. Social network, some people like coming to an office, having colleagues, having activities going on and so on. Infrastructure is one to think about. You get office space, hopefully, and you get an IT support unit somewhere. So if your computer goes wrong, or your mobile phone, you just phone them up and say, can you fix this? Well, that's not true when you're self-employed. There are ways you can fill that gap in, but you need to think about it. And finally, not the only thing to think about, but define role and promotion paths. Some people like the certainty, the stability, having a boss, having a line, and so on. Others don't. So self-employment, the big benefit is flexibility. The big price for that is a degree of uncertainty. Flexibility comes because obviously you're setting your own hours. You are choosing the people that you work for, your clients, if you like, or they're choosing you. So you're deciding who you'll work with, how often, when, and where. You're going to work from home, you're going to rent some office space, combination of the two, work at a client's premises. A lot more flexibility than potentially you have in full-time employment. But that comes at a price, uncertainty. And uncertainty is the fact that your income can fluctuate. So you get a sort of feast and famine, if you like, profit and loss account. In other words, employed, you're used to a steady trickle of money coming in. Self-employed, it can often be 1 month, it's a bumper month, lots of clients need you, another month, pretty slack. And you've got to be a little bit nimble when it comes to budgeting to make sure that you're setting aside money for the sort of rainy days, as it were. There's no automatic holiday or sick pay, so if you take a holiday, you're not being paid, all right? And there's certain number of benefits that go by the wayside. So when you're employed, you get a contribution to your pension, for example. You get death in service. You get permanent health care. And self-employed, you just need to think about which of those you might want to replace. All right? And there's financial risk. In other words, variable income is something some people feel quite uncomfortable with, others perfectly happy. And that feast and famine existence, again, some people are mentally more suited to that than others. So there's the first one to think about, quite an important one. Now, bringing it down a bit, what will your status be? So let's say you're going to go for it. What will your new status be when you leave full-time employment? Well, I could do an hour on this, but let's just distill it down to essentially there are 2 things you can be. You can be self-employed, if you like, or you can form a limited company. And there are pros and cons to both. Administrative pros and cons, tax pros and cons, and even legal liability pros and cons, and so on. And those need discussing. Now, who would you discuss them with? Well, let's deal with that in just a moment, but it's one of the things to think about. And you can move from one to the other, of course. That's not impossible. So who will help you? Well, that decision and other decisions, you may need the help of an accountant. Now, an accountant's going to be with you probably on the whole journey because you don't want to be trying to build a business and worrying about administrative nightmares like budget and tax as you go along, invoicing. You might want to just hand that over to somebody else. And also they can give you some advice, hopefully, on tax efficiency. So which expenses can you write off now that you are self-employed? Depending on your status, you might be able to claim certain costs you couldn't write off against your salary as an employee, but you can write off now. So that's all worth discussing. And I think it's a false economy in a way to try to do all that yourself, unless you happen to be an accountant. Wealth planner. Now, this is not somebody you necessarily bring in at the start, but they can be pretty useful, helping you plug those gaps in terms of the cover you might need now you're no longer within a full-time employment contract, and also helping you with the kind of financial planning and budgeting side of things. So, where's your retirement pot going to come from, for example, now that you no longer have the benefit of a company contribution? And a solicitor. Now, you don't always have to bring in a solicitor, but you are going to be responsible for your own contracts. If you're setting up a company, you might need a little bit of help and guidance on that, depending on how complicated it is and how rapidly you expect to grow it, and so on. So I'm not saying you must call these 3 people, but it's certainly worth thinking about whether you should. And the one on the left, I would say, most people will find a false economy not to bring on board. You don't have to have them as full-time employees or anything. You can just, they're guns for hire out there, if you like, on an hourly rate. Now, how you deal with downside. This is quite important. So you don't have self-employed, the benefits of death in service, permanent health insurance. So 3 areas to look at. Life assurance is quite important. That's going to pay out a lump sum that might, for example, clear your mortgage in the event that you die. And unfortunately, that can happen to anybody. Income protection will step in potentially and literally, as it suggests, cover a chunk, not necessarily all, of your income for a defined period. And then there's critical illness cover. All right, so that is a situation where you go down with a serious disease, something serious happens to you, and you're thinking, crikey, how on earth am I going to make up the shortfall? How am I going to clear my debts and so on? Well, critical illness cover can provide that gap. Now, depending on what sort of cover you buy, you'll pay different premiums and so on. It needs talking through, but that's another area where a wealth planner potentially can be quite helpful. Who will you tell? Now, basically, the bank, it's worth having a conversation with them. You are going to need to think about, do I have a separate business account, separate current account? You're going to have to talk through any outstanding loans and so on and reassure them that you've got the ability to meet your repayments. So your mortgage lender, which might be the same organisation or someone different, needs a conversation, needs a heads up, if you like, because they need some reassurance, particularly if you're trying to get into a mortgage deal at the time you go self-employed. That's probably a bad idea. Better to sort of lock yourself in while you've got a steady income and then convince them you'll be able to meet repayments, rather than trying to present them with a variable income flow and say, can I have a mortgage? So that's worth thinking about. And if you're about to come out of a fixed deal, for example, have a think about what being self-employed might do to the rate. And then your family. Don't forget, it's easy to forget in a way, you talk this all through with your partner, spouse, other family members, because you being self-employed, for example, carries some benefits and risks for them. If you've got a spouse or partner who is working full-time, well, there you go, you've got a bit of cover. But it might take you a while to build up your contacts, build up your book, get the business flowing in the same way as your income used to flow when you were employed. All that's worth discussing. Apparently, one of the biggest sources of strife between couples, married or not, is money. And here's an example of where if you don't talk it through, you might give someone a financial surprise they don't want when your income vanishes after you leave your job. Now, 3 big bear traps. I've suggested there's maybe a 4th there, but 3 big bear traps to finish on. Number 1, tax. Why? When you're employed, basically it's very simple. The payroll department take a slice of your income out, hand it over to you to HMRC, job done. Not true self-employed. You're responsible for your tax. An accountant can help here, of course. The big mistake people make is they spend money they should be putting aside for tax. How does that happen? Because they bill a client, the client pays them in full, you forget that some of that is going to have to go to pay your income tax, for example, and you just spend it, delighted with the proceeds of your first transaction. That's a mistake. So watch out for that one. Retirement is another one. It's very easy when you're setting up a business, especially if you've done it before, to just forget about retirement. I'll worry about that later. All right. The thing is, you're probably getting a company contribution into your pension when you were employed. So you need to think about where that pot's going to come from over the long term, self-employed. And then there's succession. So people who are in established businesses, for example, will need to keep one eye on, how am I going to get out? Is the business worth anything? Could I sell it? If I walk away, who will my replacement be? And so on. Okay, lots of ground covered there, and there's plenty more, but editor@killik.com for questions. And if you'd like to see related videos on one or two of the topics I hinted at in this one, then it's killik.com/learn.